S&P has downgraded Nissan to junk. Really, I'm not making this up. However, they have said that it's likely Nissan will be downgraded further once they continue to lose market share in China and the United States. So what's worse than junk? Well, I'll let you Google that one. Nissan's credit downgrade is seen as the start of a fallen angels cycle. Automotive News Europe says, fund managers say Nissan's credit rating fall marks the start of a cycle that could see as much as $55 billion downgraded from the so-called fallen angel companies, including automakers. Now, right now, Nissan has $10 billion in outstanding US dollar bonds, making it the largest fallen angel since 2020, said the Bank of America Global Research Report on Tuesday. Here in Australia, I was just at the Fully Charged live show speaking, and I got told by a few people that I was being bombastic, exaggeratory, and my predictions about the car industry were just wildly exaggeratory. Legacy automakers, they're all fine. They're going to be fine. Now, nothing's going to change. The Japanese will keep making cars the same way they always do. People will keep buying cars. And yet the funny thing is, right as these people were telling me this, or at least telling their friends this, or saying this online to whoever would listen to them, banks have begun to downgrade the credit ratings of some of the biggest car companies in the world. So, my friends, it would seem that even banks, some of the biggest banks in the world, are now starting to realize that, the Electric Viking isn't exaggeratory, isn't bombastic. He's pretty much just telling it how it is. Isn't it weird speaking about yourself in the third person? Anyhow, hello my friends, welcome to the channel. Great to see you, thanks for tuning in. Nissan has been downgraded. Now, I talked about this a while ago, how automakers would have their debt downgraded. In 10 years' time from now, there will be around $3 trillion in debt sitting in legacy auto. Will they be able to pay that debt back? Absolutely not. It's ridiculous. Volkswagen will have well over $300 billion in debt. Toyota, probably even more. This ticking time bomb is a disaster waiting to happen. It could be the next 2008. We all know what happened then. But the problem is, in 2008, there was only a few automakers who were in trouble. In 2028, 2038, there will be many more. This is an enormous problem because it could sink your stock price. It will bring the entire global market, and I don't mean just car market, I mean the entire global financial industry, down possibly in a way that could be a little bit like the Great Depression. Now, I'm hoping this doesn't happen. I'm hoping that banks stop lending now and they start putting a debt ceiling on some of these companies. It is beginning to happen. Credit ratings are being cut to junk. Interestingly, I have not seen this reported by any mainstream media at all. None. And tell me if you've seen this. I'd be shocked if you have. Nissan's credit rating has been cut to junk by S&P, with profit and sales seen as remaining weak. Isn't this interesting that the banks themselves even are starting to say, legacy auto, maybe you won't actually be able to return to what you were. It's not going to happen. You're going to pull off a Houdini. It's not going to be a miracle. It's going to go the way that it's gone for other companies in the past. Disruptors come in, disrupt the old way, and the old way, well, they lose out. Nissan's profitability will continue to lag behind its competitors, meaning who? Well, companies like Tesla and BYD, for the next several years as supply chain issues persist. Now, the thing is, these banks, these big credit agencies, they're only looking at the short term. They're only looking at like what's affecting the industry right now. They're not looking at the long-term macro situation. When they finally do, credit ratings will fall massively across the board. That means interest payments will rise sharply, obviously to borrow more money then, which they all will. They're all going to. They're all planning on borrowing $30 to $200 billion each per legacy automaker. The debt repayments on those they'll rise drastically because loaning to those companies will be considered a much higher risk. Therefore, the actual interest rates will be much higher, putting these companies into trouble sooner. Of course, the higher the interest, the harder it is to pay back the debt. Therefore, the harder it is to get more debt. Therefore, the harder it is to pull yourself out of the situation you've created for yourself. Nissan's credit rating was slashed to junk by S&P Global Ratings, a blow for the automaker that has struggled to boost profitability in the years following former Chairman Carlos Ghosn's arrest and the industry's pivot toward electrification. Now, Nissan say they are going to pull off a miracle. They're going to bring out the solid-state batteries en masse. They're working on them apparently with someone, I don't know. So same story we've heard from Toyota since 2014, that solid-state batteries would be common, ubiquitous in their EVs, would save them, would somehow provide them with the ability to rapidly transform their fleet of cars to being electric. Now, if you believe that story, well, you're obviously a big fan of Nissan, and I'll let you keep on being a fan. Nissan have to some degree recovered from 2 years of losses, and they're still targeting an operating profit this year of $2.7 billion. And they say they have a huge range of new cars that will appeal to new buyers. However, the weaker yen in late 2022 helped Nissan boost income, which made up for production snags, made up for a wide range of issues that are really ingrained in the company. And this is masking the problems going on at Nissan. Nissan's profitability will continue to lag behind its competitors for the next several years, says the S&P. The agency said it expects supply chain issues to persist, delaying any recovery in sales across the US and Europe, and pressure companies to lower prices, meaning profit margins will decline further. As companies then shift to EVs from gasoline-powered cars, they will then see even lower profit margins if they can even make a profit. A junk rating means Nissan has to pay higher costs to sell foreign currency bonds abroad, and it means their interest rates will be higher on further, and it means that interest that they'll have to pay on debt in the future will increase, making it even harder for the company to make a profit. The price of Nissan's bonds have dropped significantly since the beginning of February, and it appears as though the market is starting to say, yeah, no, we're not buying this idea that Nissan is going to make some sort of amazing transformation into an EV company, or that they're going to make any transformation at all into a truly profitable long-term company. Since this news was released, the stock market has, well, it's hit Nissan hard. Nissan stock was sitting at $8.20 on the 7th of March. After this news came about, it dropped very, very quickly to $6.95. Doesn't sound like a huge difference, but $8.20 down to $6.95 is actually a very substantial drop in the price of its stock, especially when you consider its price to earnings ratio is still relatively high in comparison to some of its peers. 5 price to earnings. General Motors sitting at around 7. Nissan is still massively overvalued in comparison to other automakers. It is a lot further to fall. Right now, Nissan's debt is sitting at around $35 billion US. However, Nissan says it still doesn't make a profit on its electric cars. But they say that they'll be able to reduce the cost of their EV production by 30% by 2026. Now, despite Nissan's early lead in the pure battery electric vehicle market, with the release of the Leaf in 2011, the Japanese automaker is falling behind, with automakers racing to develop electric cars. The Leaf was, at its prime, the best-selling electric car in the world and the best-selling EV in Europe in 2018. But with a whole bunch of new, better competitors entering the market since then, the Leaf slipped out of the top 10 this past year, as Tesla with the Model Y and the Model 3, Volkswagen with the ID3 and the ID4, Hyundai and Kia, and other models from Fiat, Skoda, Dacia and Peugeot took market share in Europe. In China, of course, it's even worse, where Nissan doesn't have a single EV in the top 50 best-selling EVs in the country. And that's where Nissan gets more sales than any other country in the world. Nissan began selling its second electric vehicle, the 2023 Ariya electric SUV, but it took over a decade since the Leaf was introduced. And the Ariya is the Japanese automaker's first electric SUV, with up to 304 miles of range and an MSRP of $43,000 US. But it's expensive to make, and it's quite heavy for its size. Plus, Nissan isn't currently able to produce a lot of them. And that's one of the reasons why, for example, it's not even on sale at all in Australia. Recognizing the urgency, Nissan announced plans last month to accelerate its EV strategy called Ambition 2030, which was initially introduced or talked about by the company in 2021. The updated strategy includes releasing 19 new EVs by 2030, up from the 15 previously announced, and higher electric sales in key markets such as the United States and China. And Nissan say that they are going to produce EVs and hybrid powertrains on the same production line, which will save them money. Personally, I think that's a losing strategy. I think you need to go EV only on that production line. That's the way that you can actually minimize your costs and mass produce electric cars, which you can make a profit on. However, Nissan believes that they can reduce costs further by reducing the size and weight of the motor to improve performance and diminish noise and vibration. I'm not really convinced that reducing the size and weight of the motor will have the drastic impact that Nissan needs in order to be competitive on price with its new electric cars. The other problem here, S&P believes that Nissan's forecasts are complete nonsense. I mean, utter baloney. It's actually humorous when you have a look at the numbers. The agency, S&P, projects that Nissan will sell 3.6 million cars in the fiscal year ending March 2024. The Japanese fiscal year is different to everywhere else. It's quite confusing, but it ends in March 2024. That's very different to Nissan's projection. Nissan says it's going to sell 5.4 million. 3.6 million versus 5.4 million from Nissan. Drastically different. S&P basically saying, yeah, Nissan, you're just making stuff up as you go along. If you think about it, Nissan sales in that fiscal year will almost certainly be lower than this fiscal year. Electric vehicle production is taking off worldwide, and the biggest car market in the world by far is, of course, China. Then you've got second to them, the United States. Nissan doesn't have any compelling EVs. It is mass producing in the United States. It doesn't have any compelling EVs. It is mass producing affordably in China. In other words, it will continue to lose market share. It's just inevitable. S&P said it will consider raising Nissan's junk rating over the past 12 to 18 months, over the next 12 to 18 months, if Nissan can significantly improve sales, increase cash flow, and restructure its business. Probably things that are not likely to happen, in my opinion. But they also said its rating could be lowered further if free operating cash flow becomes negative long term, or the company's financial base is impacted by large strategic investments, or its market position falls further in North America or China. I think it's pretty much a done deal. Nissan's market share will fall further in North America and China. Therefore, their junk rating will become downgraded once again, meaning their further interest payments on future debt will continue to increase, meaning Nissan is screwed. That's really the long and the short of it. But let me know your thoughts in the comments. Thank you for watching. Bye-bye.